It's our week 3 weekend update video. Good morning, everybody. This is Professor Hassey. It's Saturday, June 24th, and we begin our weekend update video concentrating on adjusting journal entries from Chapter 3. This week and next week, week 4, we'll be concluding our study of the accounting cycle. You have assignment number 2 this week to be completed by Sunday, and then we'll do assignment number 3 next week, which is we'll be completing the accounting cycle, preparing journal entries, adjusting entries, and closing entries for the accounts. So that's where we stand right now. Today we'll talk about adjusting entries and conclude our work for week number 3 of this summer session. Here is the assignment number 2, which you are doing this week. It's basically all in a spreadsheet that I have provided you, and you'll be doing these general journal entries of basically setting up the company and purchasing supplies and doing other business transactions, recording them in the debit and credit format, and then preparing a trial balance, posting them to the general ledger, preparing a trial balance, and then preparing the 3 financial statements, the income statement, the statement of owner's equity, and the balance sheet. All talked about in our last week and this week's lecture videos. So that's what you'll be doing this week. Your spreadsheet has been provided. All your work will be in that spreadsheet file. A couple things to highlight this as we conclude week 3. In the week 3 file folder, you'll see the accounting cycle and the various steps and the chapters associated with those cycles. You'll also see some additional videos and some explanations of debits and credits in case any of you are having a little bit of problem with those. Also now posted, and we'll talk about this in our Monday week 4 lecture video. I have now posted the project paper. This is a paper that you'll do on the last Sunday of our course, July 30th. That's going to be a busy last week. You'll have this paper to do, which you can begin as right now, a matter of fact, but you have this paper due on the 30th, and also your final examination is due on the 30th as well. But here's the project paper. I'd like you to read over this in the next few days, and this is a paper where you'll be selecting a company, and then you'll do look up the company's 10K financial report, and then prepare answering the questions indicated in the project overview into a paper format. And I'll talk more about that as we begin week 4. You also have a new student discussion forum set up for next week, due July 2nd. You'll have to select the company that you're going to be doing this project paper on. It has to be a publicly traded company, and you select a company and at the same time, give me a brief description in this discussion forum about why you selected this company. But we'll talk more about that on the beginning of week 4. But again, those are posted in case you want to look at them over this weekend. Also, there's some great information at the end of every chapter in your textbook. It's called summary or cheat sheet, where it goes through examples of journal entries or examples of the work of the chapter. If you ever get confused with looking at problems, if you ever get confused of understanding the material, go to the end of every chapter and look at this. For example, on page 63 of your textbook, at the end of chapter 3, there's examples of prepaid expenses journal entries. There's examples of deferral of revenue adjusting journal entries. There's example of accrued expense journal entries, accrued revenue, the proper way, and this is that slide I have in Blackboard, of recording the financials. So again, this cheat sheet at the end of every chapter is a great way to summarize and look for information that you don't understand in the material for that particular chapter. It's a good thing. Now here's a problem 3-1A at the end of chapter 1 that summarizes all the different types of journal entries and gives you examples of those. Remember, an adjusting entry is to adjust for the accounts for the passage of time, the adjustment of a accrual. It means recording an entry before cash is paid, the recording of expense or the accepting of revenue. It's an adjustment to your accounting records. Well, here are excuse me, great examples of all adjusting entries that could be a study guide for you. And these adjusting entries are in quiz number 2. And it gives the explanation of the entry, and you are to match that up with the appropriate journal here. All right. Well, let's take a look at this. Problem number 1, or entry number 1, interest expense debit, interest payable credit. Where is that over here? Well, that's to record an accrued expense. E, that's to record a accrual expense, letter E, meaning it's an expense that has been occurred, interest, but remains unpaid. It's a liability. We owe the money, but we still have recorded the expense. The passage of time, we owe the money. So we record the expense and we say interest payable because we owe the money and we'll pay at a later date. To record an accrued expense. Let's look at the second one, depreciation expense. Remember, depreciation is recording the cost of a fixed asset over its life. Later on chapters, we'll talk about how that's calculated. In this section, those numbers are given to you. Well, to record a depreciation expense, that is right here, letter I, the depreciation expense, debit depreciation expense, credit accumulated depreciation. Accumulated depreciation is a contra asset account. And what I mean by contra, it's an asset account with a credit balance, reducing the value of what you're depreciating on the asset balance sheet. Journal entry 3, unearned fees, professional fees earned. That is right here, to record this period's earning of prior unearned revenue. In other words, if any of you have ever had a lawyer, if you ever go to a lawyer and you want them to do some work for you, they'll say, okay, I'll do some work for you, but you have to pay me a retainer. What? I got to pay you in advance before you'd even do anything for me? Yes, that's the nature of the profession. So if you pay a retainer, that is considered unearned revenue for the lawyer, meaning that you're paying for a service that has yet to be provided. Okay, and that entry would be for the lawyer, debit cash, you receive the payment, credit unearned revenue, which is a liability account. Then when the service is provided, when the lawyer provides you the service of being a lawyer, then this is a question or general adjusting entry number 3. You now debit the unearned account, closing that account, and credit revenue, fees earned, because now the service has now been provided. They've provided you the service of being a lawyer where you paid in advance. So that's what that means. Then number 4, insurance expense, prepaid insurance. Well, that is letter G, to record this period's use of a prepaid expense. In other words, we paid something in advance. Now we're paying ourselves in advance. Paying in advance for insurance, like when you get car insurance. When you pay for car insurance, you're paying usually for most policies 6 months in advance. So if you were doing your accounting records, that's considered a prepay. You're paying in advance for a service that's owed you, insurance. So when you make that payment, it's debit prepaid insurance, credit cash, spending the cash. Then as you use up that insurance over the passage of time, you debit insurance expense and reduce the prepaid insurance account by crediting it. So as you incur the use of insurance after the prepaid, this is the entry number 4 or letter G. The next one, number 5, salaries payable. In other words, it looks like here we're now paying a salary expense that we've already accrued, and that is letter B, excuse me, letter C. to record payment of an accrued expense. In other words, we've recorded the liability. Now we're paying the liability by crediting cash and reducing the liability. Letter 6, prepaid rent. Well, here's another one, letter 6. That's H, to record payment of a prepaid expense. All right, we've paid in advance rent. Okay, most rent is usually paid in advance. It's usually paid on the first of the month. Well, that's before the month has actually, the rent has been provided for that month. So technically rent is a prepaid. You're paying in advance for the rent for the month on the first day of the month. So debit prepaid, credit cash. It seems kind of confusing, all these adjustments, but it's properly stating the accounting event in terms of either time or the use or the usage of prior entries made. Letter 8, interest receivable, interest revenue. Oop, I skipped one. Did I? Yeah, salaries expense. Excuse me, I skipped 7. Salary expense, salaries payable. That is E. Where is it? There we go. To record an accrued expense. In other words, we're recording an expense before it's been paid. Example, it's the last week of a month. So let's say it's the month of June. This week, we're in the month of June. June 27th through 30th is the last week of June. Well, let's say I work this week, or somebody works for me, and I owe them a wage, but the pay date is not going to be until July 1st, Friday. So technically, they're working 4 days in June and 1 day in July. So I would have to make an adjusting entry in June 30th, to record the salary expense for those 4 days and call it salaries payable. Then on July 1, when I actually cut the paycheck, it's like entry number 5. I debit the salaries payable and I credit cash. But on June 30th, I'm recording the accrual right here, the accrued expense, because it's salaries that's been expensed but not paid until the next month. Transaction 8, interest receivable. Again, interest receivable is getting paid in advance, or somebody's owed you receivable, 8. So that is F, to record an accrued revenue. In other words, somebody owes us interest. But as of this transaction, we're recording the interest as revenue, but it remains a receivable, meaning they're not going to pay us until later on, maybe at the end of the loan or whatever. But at the end of this period, it's considered debit interest receivable, asset, credit, revenue. We've incurred the interest, but it remains unpaid. Transaction 9, cash accounts receivable. It looks like somebody's paying us money that they owe us, and that would be letter D, to record a receipt of accrued revenue. We've accrued revenue by putting it into the accounts receivable. Now they're paying us. We receive the money, debit cash, and we wipe out the receivable because they've paid us. Transaction 10. This is to record a receipt of unearned revenue. We've talked about this. If you pay in advance to a lawyer, this is the recording of that. Excuse me, this is the books for the lawyer. Now I've provided the service, they've given me the money, and I record the revenue. Here, they're paying us the receivable of interest, giving us a check for cash and wiping out the receivable. And finally, we prepaid our rent for the month. Now we're wiping out that prepaid and charging it as an expense because the service has been provided. And that is letter G as well. So again, these are all different examples, each one of them. Interest, depreciation, unearned, prepaid, salaries payable, all perfect examples of all the different types of adjusting entries you witness in the accounting cycle. Use this as a cheat sheet, use this as a practice, and we look at these 3-5, 69 of your text at the end of the chapter is a great example of preparing the financial statements. You've done the journal entries, you've done the adjusting entries, you now have an adjusted trial balance. Here's all the accounts. Now your job is to put them into financial statements. Financial statements. Taking the adjusted trial balance and putting the balance sheet accounts in the balance sheet, doing the statement of owner's equity, and also preparing the income statement. And that's an excellent practice of understanding the financial statements, using the trial balance and putting it in the proper statement. That example is practice or given in our week 3 Blackboard, and it's at the end of the chapter 3 in that summary cheat sheet information given at the end of the chapter. And here's what this adjusted trial balance looks like in official financial statements. Okay, here's the income statement. That's the first statement you always should do. And notice there's no balance sheet accounts in this at all. It's just a listing of revenues and a listing of all the expenses from the trial balance. You total up the revenues, you total up all the expenses in the adjusted trial balance, and this company made $87,200 profit for this time period for the year ended. Note the statement heading, very important. Name of the company, what type of financial statement it is, and for what period. That is huge. If you don't put that down, how's the reader going to know what's this profit for? So an income statement is just going to the adjusted trial balance and listing all the revenue and expenses. So a reader can interpret, what did we make money? Then you take that $87,200 profit and put it in the statement of owner's equity, meaning we started out the year with $255,800. We add in the net income that we just showed for the year here, and then we take out any withdrawals by the owner right here. That's on the adjusted trial balance. And we come up with our capital balance at the end of the year. Beginning balance, profits, less withdrawals. Then we take this $297,000 and it adds to the balance sheet under the equity section. So you go back to the adjusted trial balance and you list all the asset accounts, all the liability accounts, and then that capital account that we just calculated, and golly, $600,000 of assets equals $600,000 of equity and liability. Those are the 3 financial statements, and you notice they all work together. The profits go to the equity, go to the balance sheet. And notice how I reported the assets. Automobiles, what we paid for the automobiles, $168,000, that's that balance on the adjusted trial balance, less what we've depreciated thus far. That's the credit balance, accumulated depreciation. So we've paid this for our automobiles, we've depreciated this thus far through December 31st, and there's our current balance of our automobiles. Equipment, this is what we paid for it. This is what we've depreciated. And there's the balance in our equipment account. And then naturally land, which is not depreciated. So we list our assets and they should equal our debts, all the different debts. And notice unearned fees is a liability. Somebody's paid us in advance for fees yet to be provided. So here it's just taking all the balance sheet, adjusted trial balance accounts, debits and credits of all the accounts, and putting them in the proper format that tells the reader, did we make money? Income statement. Note the header. What's the equity position of the company? Note the header. And what is the balance sheet? The amount of assets the company owns, the amount of debts that they have, liabilities, and the equity position of the company, and everything is in balance. Pretty cool. Now, what we do in our next video on chapter 4 is to close these accounts. Why do we close the accounts? Because we want to determine in the next year what's going to be our revenues and expenses in the next year. So we have to zero all these out to close the books. The balance sheet accounts are not closed. They are ongoing. They go from year to year. Why? How can we close out cash when we got money in our bank account? How can we close out the automobiles unless if we sell them? Asset accounts and debt accounts go into the next year. but revenue and expenses are always closed at the end of the year. And that's what the closing entries are all about in Chapter 4. And we'll discuss that in our next video. So for this week's assignment number 2, you're just doing journal entries, general ledger posting, and trial balance. Next week in assignment 3, which will be posted on Monday, you'll be doing adjusting journal entries, adjusted trial balance, and the closing entries of Chapter 4. And we'll talk more about that as indicated earlier in our week 4 video. Adjusting entries, closing entries are our final completion of the accounting cycle next week. But this week, we're just concentrating on general entries, general ledger, and the financial statements from the trial balance. So that's where we stand in class currently. We're in good shape. Remember, if you want to jump ahead, you can take a look at the project paper information. But number 1 task this week is to do this assignment number 2 and move forward into the next week. Hard to believe, but next week is week 4. We'll be halfway through the study of financial and managerial accounting. But a lot more to accomplish as far as the accounting cycle. You're doing journal entries this week in your assignment 2, and next week in assignment 3, you'll be doing adjusting entries and closing entries. So have a great weekend, everybody. I'll be around if you have any questions or concerns, and we'll see you all in a couple days on Monday's week 4 video. Until then, adios.